can't stop, won't stop. Is SLV ETF the next GameStop? So here are a few interesting points that I would like to show you quickly. So first, definitely the Reddit forum, the subreddit WallStreetBets is targeting SLV. So you can see that this headline, world's biggest short squeeze is possible and we can make history. And it actually backed by some thesis as well, the short squeeze and also the fundamentals about the silver. So second thing is definitely the Market Watch News is reporting silver's actually rallies right after the Reddit post about executing a short squeeze. So we can definitely see that in the chart shortly. And also the third thing, so we noticed that as shown in the zerohedge.com one of the posts, there is a unprecedented flows into the silver ETF. So there is an inflow of this ETF, and if you can see that this is huge. So this is definitely unprecedented. So a lot of the money flow into this silver ETF. So in this video, I'm going to share with you the price action analysis together with the volume spread analysis with the Wyckoff concept to see if we can just find any telltale signs and also use the approach to determine the direction of the SLV. So hopefully just before the potential explosive movement, if it really happens. Alright, so let's get started now. So as usual, let's quickly get to the SLV daily chart. This is a huge long downtrend. So it has been going on for quite some time. And subsequently, we see that there is a exhaustion of the supply together with the exhaustion of the price movement to the downside. And this is a change of character, which essentially stopping this down move and at least into a trading range. So subsequently, right after this 2016 change of character, which actually is stopping this downtrend, SLV ETF just entered into the consolidation range and actually lasted for quite a while. That's from about 16 all the way to 2020. So you can see that this 2020 COVID sell-off actually just acted as a spring. So likely this is the phase C. So this is a change of character, secondary test. So this is the B, tested the resistance and also the support level, attempt to break out. And look at this second point of the fear represented as this COVID sell-off. So this is a phase C, which actually confirmed by the sign of strength rally, which broke out from this trading range. So this is a very interesting movement, and the whole chunk of the trading range actually is a accumulation of the SLV ETF. So we can see that in the volume signature as well. So right after this change of character, the volume is kind of we have seen a bit of the pickup in the volume, but the real movement or the real participation is actually started in the 2019, somewhere around July. So volume has been expanding in this minor sign of strength rally. So attempt to commit above, but it didn't really last long. So it tried to commit above about halfway of the trading range, but eventually just before this COVID sell-off, it just attempt to break out. So it definitely dragged by the whole market, and with a spike of the volume, a lot of the supply come in and a lot of the panic sets in and sell-off happens. So you can see that this price action with a lot of the gapping down action, very bearish spread, and together with the increasing of the supply level. So pretty much that's this whole movement, like the minor sign of strength followed by attempted to back up, actually failed just because of the COVID sell-off. So this is pretty much in line with the broad market sell-off, but you can see that the recovery is actually very quick with a consistent of the supply, consistent of the demand, followed by a very shallow type of the pullback. and then the rest is the history. So the real movement actually happened somewhere around July, where we see the expanding of the demand and with a acceleration to the upside, so creating this buying climax high, and subsequently this sort of the supply came out, essentially stopping this up move, at least into a consolidation mood. So here is this consolidation mood. We have seen the Wyckoff event, buying climax, automatic rally, secondary test phase A, and then this is the test in B, test in B. So I just wonder, could this be a phase C? So this is just prior to the breakout of this backing up action. So the backup action is a very great action, and it actually happened in a higher low format instead of pulling all the way back into this resistance, now turn the support level. It actually happened somewhere a bit higher. So it's in a down sloping range. So this is possible a sign of strength rally or a minor sign of strength rally with increasing of the demand at the moment. And even though there is a spike of the supply came out, very similar to this kind of the action, you can see that in terms of the volume is very much at the same level, and in terms of the price action, the bearish candle actually is quite similar. So take a look, this candle, compare it to this one. In terms of the supply, very much similar, and in terms of the level, I think it's happened right at the same level as well. So definitely this is the supply zone, so where the initial supply started. So whenever the price come back to the level, it actually reacts with the supply, and here comes a sell-off, but there is no continuation like this reaction down here. So no continuation to the downside, and in fact it's just have this higher low form. So this is the low and this is the higher low. So with the increasing of the supply, which need to be tested, so they actually tested and then tested again. So these two reaction actually tested this previous down move with the increasing of the supply level, and subsequently these two volume bars actually happened on last Thursday and Friday. That's where the Market Watch reported that the silver actually rallies right after the Reddit post about executing a short squeeze. So these 2 days actually have spike of this volume right there. So you can see there's a gap up action, but the next day actually just attempt this supply zone right there, and eventually have some kind of the rejection. So this is the 2 bar. So in terms of a full spread, the true range, so is very interesting and very bullish. So this is the true spread of the first day, Thursday, and subsequently second day show some of the profit taking set in, where there is a some selling happen right within this supply zone, where I just box up with the red rectangular. So you can see that this 2 bar probably attempt to break out of the previous swing high level, and hopefully can just continue to the upside. So in terms of the whole structure, I think this is definitely very bullish. Certainly this accumulation has been going on for at least 5 years, since 2016, right after the change of character, and a lot of the accumulation in this trading range, and also ton of the participation where this minor sign of strength rally happened, and subsequently you can see that the COVID sell-off did not really break the price or break the structure. In fact, it's just kind of the shakeout type of action or spring type of the action of the support level right there. And definitely right after this shakeout, and we see a tremendous of the runoff of this acceleration to the upside, with the expanding of the volume. So definitely this is a beautiful accumulation structure, and followed by a backup action which is currently still unfolding. So right now, just a few days ago, actually not a few days ago, it's actually somewhere around this period, probably a month ago, since December or end of the November period last year, we see this minor signal strength rally and followed by another test. So that is potential the whole backup action. And last 2 days actually have seen some expanding of the volume, but there is some hidden supply right there, and that actually happened right at this supply zone. So overall, I'm still bullish with SLV because this accumulation range has been going on for at least 5-6 years, and there is huge causes built out of this accumulation range. One thing that I would like to show you is the point and figure projection which I did in the SLV ETF. So as you can see, that this is a daily chart in the point and figure chart. So if I just use this projection starting from this phase C, so this is a shakeout type of a movement where there is a temporary break below this support level, and I just calculate back to two segment. So one segment, the first segment is somewhere around here, and the other segment is all the way into this kind of selling climax, the swing low level. So the first target is right at about $26. So you can see that it's very kind of just accurate, just fall in this first target zone right after it came out from phase C spring. So this is the first target to predict the sign of strength rally, which is this rally up. So the projected target is somewhere around 26, or to be exact, I think should be, let me see, I think it's around 26.4. So you can see that the price actually kind of overshoot a bit, maybe just slightly below 28, about 27 point something. So I consider it's very accurate in terms of this projection of this sign of strength rally out from this phase C spring. So the second target, using the segment extended all the way to the swing low level, is somewhere around 32 or 31 point, let me see the exact number, 31.5 or 32. So this is based on the base out from this phase C. So together with the backup action, or you can call it reaccumulation, which happened right after this sign of strength rally. So this whole chunk right there is another accumulation, or you call it the backup action. So that will be using this segment. So that's a segment that I use from here all the way to this change of character bar, and right after that I can project to about, I think it's somewhere around 31.5, which is very similar or exactly the same as this whole segment right there. So whenever this happened, it could probably suggest the timing. So this is the next target, about 32. So that's pretty much based on the first segment out from the base, and also the backup action segment as well. So in terms of the full target, if I just take the whole chunk, this accumulation range plus the backing up action, then I think there's a huge target, the massive target ahead. So based on the estimation, this is somewhere around 47 to 57. So let's just take the minimum target as 47. I think it actually just lies on this resistance level. So this target is very consistent with the traditional type of the technical analysis. It's just a resistance level. And if we just look at the first target, let's say somewhere around 32, so it's probably lying on somewhere around the resistance level. That's the previous trading range, so this is quite makes sense as well. So you can see that in terms of the whole accumulation out from this huge chunk of the accumulation range, the base plus the backing up action, it definitely can have a huge target, so somewhere around 47 all the way to probably 57. But I will definitely need to adjust or recount when the first target achieved. That's $32. Okay, so that is the target based on the point and figure calculation. And let me just go back to the daily time frame and let's talk about the trading plan. So if you will have the position right here right now, then I think it makes sense to just keep and hold the position, because this is definitely a sign of strong rally followed by a backup action. As long as it didn't really break below I mean the conservative stop somewhere will be around $20, so that will be the very conservative stop if you have been holding for quite some time. Otherwise, if you prepare to hold it for long-term investing or position trading, that's probably you can just put it somewhere below this second defense level, so somewhere around $17, that would be fine. But for aggressive traders or would like to scale in or add the position, so far this is another structure, so this could be the minor sign of strong rally followed by reaction, and we see that there is a absorption of the supply. So unlike the previous reaction, so this reaction is a lot shallow and has been tested twice. I think this could be quite a nice structure. So the immediate support level, that will be around 23, as I box up in the green area right there. And the first resistance or supply zone that you need to overcome is somewhere around $25, which I box up in the red area right here. So as long as it can just break above 25, the red area right there, then it will just definitely challenge the previous swing high level somewhere around 27, and followed by the first target, which I show you, which is somewhere around 32, which if I just look back for the previous charts, I think there will be some consolidation area right there, the previous chart. So if it just wants to trade within this shallow type of a consolidation range, then I think the immediate support level or the stop can be set below this red area, so that will be somewhere around 22, so just below that. So if 22 or 23, 22.5, so this green area cannot hold, if it breaks, then likely you will just go back and test the low again. So this will be the failure case. Otherwise, definitely can stick to your trading plan and possible have a breakout, maybe back test, and followed by a challenge of the previous swing high level, and then the first target at $32. This is the end of the video. Hope you enjoyed it. If you'd like to learn more on how to increase your winning rate, definitely check out the video that showed up on the screen right now, and do remember to subscribe to my YouTube channel and get my weekly watch list update and exclusive content for free. The link is in the description below. Thanks for watching. I will talk to you soon.